coaster week continues for the financial sector. Stocks bounce back from yesterday's minor losses, ending the day up more than 300 points.
Yeah, regional banks are also starting to recover today, and now the focus is on the Fed and if we're going to see interest rates go up again. Chris Welch is here with tonight's update. It's a delicate moment for the financial system, Chris.
That's a good way to put it, Steve and Natasha. The Fed's in a tough spot here. Despite the fact that inflation cooled a bit last month, it is still hovering at around 6%. But will the Fed raise interest rates again next week if rising interest rates played a role in the collapse of these two banks? Many experts say no, or at least not as big of a hike. Now, in terms of the fears surrounding the U.S. banking industry today, many experts finally breathing a sigh of relief.
I had a great sleep last night. I was not up at night.
Financial planner Stacey Francis says that if she is not sweating the state of U.S. banking, the average American shouldn't either. But that's not to say it hasn't been a nerve-wracking several days.
There was a lot to digest, and quite frankly, it took a little bit of time.
The collapse of Silicon Valley Bank and then New York-based Signature Bank led to uncertainty on Wall Street, especially for other regional banks. Stocks at First Republic Bank fell more than 60%, but today jumped back.
So yeah, I think that this is an indication of investor confidence in the system.
Confidence in the system, boosted in part by a slightly better inflation report Tuesday morning. The Consumer Price Index for February slowed to an annual rate of 6%, still stubbornly high, but slightly better than where it was in January. Last week, Fed Chair Jerome Powell's testimony on Capitol Hill led Fed watchers to think he may be considering another half-a-point hike in interest rates to further cool inflation.
The process of getting inflation back down to 2% has a long way to go.
But now, just days after the second and third largest bank collapses in U.S. history,
I can't imagine that they will raise rates.
Further compounding the Fed's decision is the fact that rising interest rates, alongside the bank's mismanagement, contributed to the downfall of SVB.
I think the Fed has to recognize now that it is the inflation-fighting increases in interest rates that have put pressure on banks. And so that will have to give them pause.
And credit rating firm Moody's today downgrading the outlook for the entire U.S. banking system. It went from a rating of stable to negative. Also, the Wall Street Journal is reporting that both the Securities and Exchange Commission and the Department of Justice are investigating SVB's collapse. Natasha, back to you.
All right, Chris, thank you.